Hello and welcome to Big Deal. I'm Nisha Podar. Now, the Silicon Valley bank crisis sent shockwaves across the startup industry, but soon the US government support really arrested the damage. But are we at the risk of a contagion? Let's delve into the cause and effect analysis of the SVB crisis with the industry experts joining me on the show today. Let me welcome Rajeev Suri of Orios Ventures Partners, Nishith Rastogi of Locus, and Ashish Fafadia of Blume Ventures. Gentlemen, so good to have you on CNBC TV18. Now, let me begin with the founder then. Nishith, your company was in the midst of this particular crisis. You did have deposits at SVB. Give us the first-hand account of what really transpired in those days.
Absolutely. It's definitely a week we will all remember for our lives. So it all started around Thursday, 5 a.m. San Francisco time, so about 5:30 p.m. India time, where a couple of founders found that their last night wires did not go through. They messaged on certain WhatsApp groups which we all founders share, and within the next hour, we actually approached the board with an email saying, "Hey, there is a potential crisis coming up. What should we do?" Our board was very responsive. We had a meeting a couple of hours later where we discussed the next steps. Now, it's important to understand at this point that this is still 7 a.m. San Francisco time. There's not a certainty in the news. So the founders and the board members, everybody is facing a lot of dilemma. One, should we move out all the money? Because many of us also have venture deadlines where you may attract penalties if we move out all the money.
Yeah.
Second, if you have big money, they are parked in much safer accounts like money market. To move them out, you need to take them to checking accounts, which have less insurance. Should we take that risk? Domestic wires were working, internationals were not. Small wires were working, big wires were not. Amidst all of this confusion, then everyone runs to safety, right? This was a Exhibit A tragedy of commons. All of us started, to decide to withdraw our money.
Yes.
We at least all attempted to withdraw to money, and that's what led to a historical, 42 billion withdrawal within the first 11, 12 hours.
Yes, yes.
And it was an extreme,
So, so the steps were taken as soon as you thought there could be a crisis. Ashish Fafadia, jump in on this. The VC community has been criticized for their role in the, run-in on the bank and creating that particular crisis. How do you react to that?
So I think the perspective is that the VCs did push out or encourage the founders to withdraw from the bank. At this juncture, I think we should definitely take in two, three factors. Number one, at that point in time, you have a clear challenge where the founders are complaining, and you are also observing that we are unable to get through certain wires. And it smells like a systemic risk, but more so, it is something which is a little more specific to the SVB bank per se. In a situation like this, I definitely feel that any investor has a fiduciary responsibility to their ecosystem of investors and founders to do the right thing. And there will definitely be an advice to take the flight to the safety. In a scenario like that, definitely one should say you could be a little more vigilant and take a big leap of faith and take care of the ecosystem. That's a fair point. But at the end of the day, we are responsible for making sure that the money is managed and given the right advice to the founders. At that point in time, the best thing was to make sure that payroll for the next month is managed. Let's understand that US has a dual cycle of payroll, unlike India.
Yes.
And if the founders are going to lose the capital to a little bit of a leap of faith that we as an investor were to take, then you are going to put risk the other ecosystem of your employees, of your investors, and those things have catastrophic effects as well.
Yes.
So it was a little bit of a devil in the deep sea kind of a thing.
Yes.
And in that moment, I definitely feel that the best thing was to make sure that you are going to be able to see continuity of the business, make sure that your employees and creditors are going to
Sure.
not lose faith in you.
No,
and
no,
take
I
the situation
understand,
head on.
Ashish. I understand. So that was a proactive measure taken in the interest of the companies and the portfolio companies. But Rajeev, Suri, how do you see prima facie the impact on India per se and the Indian startup industry as of now, as understood?
Thank you, Nisha. Appreciate the opportunity. I think there are 2-3 categories of startups that I would sort of look at. Let's sort of look at a group of startups that are sort of totally India focused, dominantly India focused, where the market is India, right? So clearly in that category of startups, we really do not have to worry too much about any contagion effect spreading to India, because very simply, these are companies that were born, bred, and operating in India. And hence their business models, their banking, other things would have also been done in India. So to that extent, I think we are very clear that that part is sorted, right? So that part is there. There is a second category of startups, which are basically foreign, they also have foreign footprints, and they've taken some foreign funding perhaps, right? That category of startup obviously has got some kind of an exposure to this, because the Silicon Valley Bank was one of those specialized banks that focused on startups and did a lot of good stuff with startups. So to that extent,
Yes.
this was a banker of choice for a bunch
Yes.
of these kind of startups that were doing it.
Yes.
That's the second category. I want to talk specially about the third category, which I think is an interesting category. There is this category of startups that are focused in only one geography, let's say India for the moment, but they have for some reason focused on registering themselves, let's say in Delaware or any of these places, because they've got
Yes.
into one of these accelerator programs, let's say, and Y Combinator or something, right?
Yes.
This category, I think, is an interesting category because they now have a dual risk. Their market exposure and the risk is dominantly in India. So clearly the focus and what happens in India ought to be the one that should be the thing that the founders should be focused on.
Sure.
At the same time, because a bank is sitting in some other geography and the money is also sitting in some other currency, they're exposed to two different risks. There is a currency risk there, and there is also
Right. I lost the line there, but I got a gist of
happening in it, which are not necessarily things that the
Right.
founder can keep track.
Right. So Rajeev, Indian origin founders
So
with companies incorporated overseas are the ones which are maximum at risk. But SVB was not just taking deposits, but there are other areas also like venture debt that they have a large portfolio in. And on the other hand, they're also providers of funds as LPs to many of the venture capitalists as well as private equity. So we'll discuss that and more. But Nishith, I want to first understand the semantics of it. You had the mid-March payroll coming. You have operating capital requirement for a company. And then there is a debt line also, for which again, if you have not consumed the entire debt line which was given by SVB, the US government support does not cover the remaining portion of that debt. So a lot of founders are really looking out for that amount also. Put all this into perspective from Locus' point of view.
Absolutely. So this was definitely an important event for us. We had 8-digit dollars logged in SVP, but given we are a global business, we actually had similar amounts spread over our Indian and European banks as well. So this ensured that we don't have working capital access issue as long as our locked capital becomes whole, which is what the FDIC ensured. But this does not insulate us. There was 3 immediate steps we needed to take. First, towards my team. As Ashish mentioned, in US, the payroll goes twice a week. So 14th March was the payroll. Even if you have the money, your payroll vendor was connected to the SVB account. So you needed to transition that. Second, my fiduciary duty towards my clients. I needed to make sure all my servers are up, all my vendors are being paid, and all the infrastructure payments that were going through SVB have been transitioned to alternate banking accounts. And this was all happening over a weekend. And many traditional players in finance are not fully operable on the weekends. So that further complicated the situation. And third, all our receivables. So we work with large public market companies like Tata's, Unilever, Nestle in multiple countries of the world. We needed to move our billing to them from SVB account to an alternate account. And this is not as simple as just calling them up, right? Your invoice needs to have the bank account numbers. They need to register the new bank. So moving all the incoming revenue, which is like a large portion for us, move into alternate banking accounts. So these were the three immediate steps that we had to do.
Yes.
Now, given that our overall capital was safe, we use our debt line as a safety line. So we are still evaluating what to do about it, either to keep it or offset it.
Right, right. So that's a great account of all the aspects of how a startup could have been impacted because of the association with the SVB crisis. But why did the crisis actually hit this segment in the first place? And what are the solutions and learnings going forward? We'll discuss all that and more when we return after a very short break on Big Deal. Stay tuned. Welcome back. You're watching Big Deal, and we are discussing the SVB crisis and the impact on the startup universe. Now, Ashish, is the big reason for the impact on the startup world and the future impact that we are going to see as part of this particular crisis in terms of funding is also because of the concentration of startups in one particular bank, and it largely remains unbanked by the mainstream banks. Is that the root cause of a lot of trouble here?
Absolutely. You will have to just break this down. You said two things. Let's break this down into those two parts. Number one, the concentration. What leads to that concentration? When a startup is beginning its journey, a conventional bank, and this is not about an Indian bank or a government bank, it is true for banks worldwide. No large bank is in that frame of mind and has the infrastructure to be able to cater to the needs of a startup, and neither do they take that constituency as a mainstream constituency where they need to create products or cater to them. The other factor is that when it comes to Indian banks specifically, you can very well go and open an account with a bank which will have a branch in headquarter in India and a branch overseas. But there are KYC requirements and challenges of having a local bank account, which do have a bit of a situation where the startup may not be able to always comply because they might not have a bank account of a foreign company in India. When we look at the other side of it, which is the SVB challenge, you have a bank which is catering to that, so it becomes a bank of choice for the startup. They've done a phenomenal job all through the last 2+ decades in catering to the industry which others thought was not very cool or not very profit oriented. And they end up creating a massive spread and market share. And then you develop the ecosystem. We have internet banking, which makes it easy at the click of a mouse button or a keyboard to get the money out. And we have had runs in the past also, but it takes much longer for this quantum of 20% of the bank's deposit base to be called upon. And then you have a very high degree of social media connectivity in this universe. So the concentration coupled with the fact that the universe is very, very connected to social media, whether it's a WhatsApp group or Twitter or other platforms, led with the fact that there will be a very fundamental challenge that they had at their end in terms of their asset liability management. All these put together created a concentration and a risk which eventually emerged in the form of the crisis.
Right, and we saw the impact of that risk as well. But Nishith, jump in on this. So does this, because of other banks now attracting the deposits coming in from startups, there is also, facilitation towards gift city bank accounts, and there are various other steps being taken. Do you think that this is also a moment where now startup industry is becoming more mainstream when it comes when it is regarding the banking space as well as banking with startups for business?
Absolutely. As founders, we are wired to look for silver linings. The fact that the President Biden himself made an announcement on Monday, Janet Yellen flew back on Friday. Startups are now important and part of the mainstream, both from a cultural aspect as well as the financial aspect. And it's a great opportunity for other mainstream banks to have a look at it, right? People were actually taken aback that SVB had over $200 billion in deposits, and that actually puts it on a significant size of the bank, right? On the other hand, I think the last 7 days educated so many founders about the importance of treasury management in addition to building products and distribution. Then some certain amazing facilities by the Indian government, right? Like the gift city provision, right? Which allows you to park, get a reasonable yield without any FX exposure. More and more founders got to know about it. They will start utilizing it. And then that forms a vicious cycle of government providing such measures, startups using it, and it overall, making the entire ecosystem move forward.
Yes, but
So
Nishith,
it will
we
be a
need
tough and
to.
challenging environment.
Yes.
But yes, there are good things to look out of it.
But Nishith, if I can say that SVB was probably the single largest bank or financial services firm in the world which banked or had the highest exposure to companies which does not make profit. So I don't know how many banks can take that kind of risk. But Rajeev, also a lot of people think that there would be contagion effect because SVB was not just a bank, was also debt provider, and their venture debt is up for sale, and their LP, they being LP and facilitator of funds for many other private equity and VCs also is an area of concern now. So where is the money really going to come in from? Is it going to put a further pressure on the supply of liquidity to the startup ecosystem coming in from the VC or venture debt, which was anyways constrained because of heightening interest rate cycle?
So Nisha, you're absolutely right. So the fact of the matter is that we have seen over the last 6 months, a slowdown in the flow of money, very simply because, the dollar has been getting more expensive, and for so the environment has been getting a little tougher. However, I think the big thing that we are facing right now, which I think is very, very interesting that's also happening, is that, this thing is not necessarily going to change the dynamics dramatically more than where we already are, right? Maybe it's going to have a little bit more of an accelerator effect, perhaps for the short run, right? But in the medium to long run, this is not something that's going to change the dynamics of the environment any more than what the dollar tightening or the overall environment sort of tightening or the recession, the yield curve tightening and those kinds of things changing. Those are things that are, I think, bigger in terms of what's happening. However, I think the other thing that we have to think about is, so where is the alternative money going to come from? There, I think we have got a little bit of a cause for cheer, because I think Indian markets have sort of been holding up quite strongly, right? You remember that a lot of this money that we are talking about, particularly when it comes to SVB, is money that's coming in dollars from, folks that are sitting out there, right? So it's not money coming from India, right? So to that extent, because of the fact that the Indian markets have been quite strong, the capital flows are quite well, and because of the formalization of the economy that we've seen in the last 4 or 5 years, we are now seeing acceleration in credit and other cycles that are happening, because of which there is an increased velocity of money that's flowing, because of which there is more money that's already flowing in. There is some hope that over the next few months, maybe a year and a half, Indian money will start to, take a little bit more hold. That, I think, is a hope that we have. Clearly, it is playing out in the funds itself. If you look at the funding realities of a lot of the funds, including the funds that are sitting here, we are already seeing the benefit of Indian ecosystems, generating more money for the funds to be deploying the money into the startups as well, right? So if that's true, it is also reasonably true that debt money and the other monies and later stage monies will also start to flow in from India. That, I think, is a broader hope we have. We have to...
But Rajeev, we have to still understand the collateral damage. Ashish, very quickly, and I have 1 minute each for Ashish and Nishith for final comments. Ashish, how do you see the collateral damage from here on? Because Indian startup ecosystem is mostly developed because of the dollar money flowing in. And if there is a crisis there, the assets in the same space will be much cheaper over there at a time when liquidity is also constrained. So there is a trade-off between an Indian investment as well as the US company investment now, as I see it.
Well, there definitely is a challenge, and I don't think the crisis makes it any easier for sure. So I'm not going to even debate on the fact that we are going to be in furthermore uncertainty on how some of those things shape up. But let's put in perspective, I want to highlight just 2 quick things. One, it definitely allows for the Indian banking ecosystem also to take stock on how they can look at servicing this category. It's not the issue that the startups are not profitable. For that, you may not give them credit. but giving other services is a mainstream thing. And imagine if that kind of a volume was passing through Indian banks,
Right.
even a fraction of it would
Right.
definitely make the day.
All right.
And the other challenges, other opportunities for people to take reflections and learn. There are tremendous amount of learnings from this crisis,
Right.
which maybe we can discuss later. So I do
Right.
see some positives and opportunities, but yeah, the challenge on funding will definitely remain.
All right,
and we'll
but
have to wait for the rest of the year to see how some of those things pace up.
But what I'm not answered on, Nishith, and help me understand how grave the crisis could be in terms of the collateral damage and the contagion. Because it will not stop at SVB deposits. It is also the venture debt as well as the equity funding that was also backed by that one institution.
The actual revenue. So even for, say, well-funded startups like us with long runways, the overall sentiment in the business environment will be of austerity, and making revenue sales would take a little bit longer. There may be a little more pricing pressure. So yeah, everybody needs to focus a little more, heads down, and build a little extra.
All right. So it could be trying times for some time, but we have to see the real impact of this one crisis and overall ecosystem getting impacted in the startup world along with the people and the institutions which were funding it. Thank you so much, gentlemen, Rajeev, Nishith, as well as Ashish, to put some perspective into a crisis which is just about developing, and we are yet to see its impact going forward. With that, it's a wrap on Big Deal. Thanks so much for tuning in.